All right, B2Gold, BTG on New York or BTO on Toronto. We're going to use the US dollars today. So if you think about it in Canadian dollars, make sure you're doing a conversion and yet you're on apples to apples here. Okay, so they had their quarter out last week. It was pretty good. Market kind of liked it. Stock's been doing really well. Mini pullback today, which is why I wanted to talk about it, because I want to reiterate it and make sure everybody knows my position on it, and I still think it's really good. So first of all, revenue was up 44%, so nothing wrong with that, obviously. Earnings per share was 7 cents versus 2 cents. I don't know if that's even really comparable. I wouldn't get too hung up on that. It's really the cash flow and the how much they're producing and how much an ounce costs them. So cash flow from operations is very close to just taking the all sustaining cash costs, the price of gold minus the all sustaining cash costs, and then multiplying the number of ounces they're going to produce, and that's pretty close to cash flow from operations that you see on the income statement and statement of cash flows. It will be at least in the ballpark, and it should be, and it is in this case, and that makes sense. So that's great. When we do our cash flow IRR, we use cash flow from operations, and everyone that's not a GAAP number. So in fairness, we make maybe some slightly different adjustments than other people, but it's supposed to be what you earn in cash flow without depreciation and interest and all that kind of stuff, just from running the business. Okay, simple enough. Cash costs of only $6.95. That's really low. We can do some simple math right here. Gold trades at $1,700 an ounce, so they're making $1,000 an ounce, roughly speaking. We multiply by the ounces, and they've done that for us in their own assumptions, which is kind of interesting. So they're saying based on current assumptions, assuming a gold price of only $1,500, which is typical, they'll lower it a bit from the actual price just to be conservative. I like that. The company expects to generate cash flows from operating activities of $700 million in 2020 and $800 million if the gold price stays at $1,700 per ounce. And that's pretty conservative in my opinion. I think gold's probably going to go higher. It's hard to predict a commodity price for sure, no doubt about it. But with all the stimulus packages around the world, you got to believe a hard asset, gold, should go up. I mean, I'm keeping it simple. I don't want to get too technical into why we think that, but I think that's the simplest explanation. And people are gravitating towards real things that you can touch and feel, as opposed to printing money and what's the US dollar worth versus Canadian dollar or any currency. Gold is physical, so I think people like that. Okay. They also go on to say not only is that cash flow for 2020, but it's quite sustainable given the mine life, and they don't know and what they think they can produce at. They think they can average 950,000 ounces over the next 5 years. So really, I just think the stock is pretty cheap. So let me bring up our valuation to put some more meat behind this. And here we go. Okay, so first of all, I love how the return on capital, that's kind of the bars there. And I have the thin ones today because they are the quarterly bars. Each one is a full year, but every quarter we just drop one off, add one on, so it's like a rolling 4 quarters. And you do see how correlated with the stock price it is, right? As we have rising cash flow IRR, return on capital, the stock is rising, and then when the returns start to fall down, the return on capital when the return on capital starts to fall down, the stock starts to turn down, and then when it starts going up again. So we're clearly in a period of up. So with this last quarter, return on capital went from 11.53 to 13.79. Two more points. I'll take that. I will take that any day. I think it's great. We know the correlation. You can see it right here. and we know statistically it's correlated quite strongly with improving stock prices or stock movements, let's just say. So that I have about $700 of EBITDA, which would match with the cash flow I told you that the company was projecting, and that's only trading at 8 times EV/EBITDA. So pretty good balance sheet, not that much debt, decent working capital. I mean, I don't know what else I could say. I guess one other thing I want to say is some people would maybe look at the stock chart and go, it's gone up too fast, too far, whatever, but it's still only trading at 8 times. And gold stocks kind of do this. This is what they do. Gold, goes out of favor and the stocks don't do so hot. But then you realize, well, wait a minute, this is probably a good time for gold, which I think this is. And gold can go for a sustainable period of time. And I think we're in one of those periods. So this don't look backwards and say, oh, we missed it. Just what do you think it's worth? 8 times is very reasonable. And in our valuation model, we're getting $7 a share. And I think I'm being conservative. I did taper off the fade. And so I think it's very conservative. Sure, some people are going to sell out, and I will. One last point here before we go. It does seem to trade kind of a little bit opposite right now of the market. So on a risk off day, this is when it does well. When everyone decides, oh, I think things are okay, and they buy technology, they do tend to sell this. However, I will say gold does tend to have its own trading regardless of the market. It just seems to be its own compartmentalized, uncorrelated asset, and that's another reason I really like it, actually, because as long as I think it's worth more and I feel like I've got a bit of a hedge, but it can also go up even when the rest of the market's going up. So you got a lot of dynamics there, but end of the day, B2Gold, I still think it's cheap. Production's going up, their cash cost is low, their cash flow IRR is high, valuation is good. So a lot of check marks there. Thanks for watching our investment video. If you want to improve your portfolio returns, simply subscribe. Or if you're an investment advisor or retail investor and you want help with your portfolio more directly, we can help you with a managed account and manage each and every trade for you.